All right. What else I got here? Okay. Live chat. That's good. And I'm a minute early today. Look at that. What's up, everybody? Mr. Madden. They come out in a dime package. Let me read that. All right, let's sift through some of the earnings here quickly. A lot to talk about today. A lot I would like to talk about, so I'm not going to try not to try not to clog you guys up with too much. But you got a lot of interesting things going on, obviously, in this market. So many different moving pieces. A lot of the stuff we've been talking about, and fortunate enough that earnings season, it gives you a chance to kind of dial it back a little bit, kind of chill out and watch how things shake out. And some interesting things, the way things are shaking out here. So we'll definitely talk about that. Let's go through some of the earnings. Some of the more interesting names. Amazon, you got a little bit of weakness, I heard. Yep, down another 15, down 10 during market hours today, down 17 here. What was the low? Under 200. So Amazon, where's that look like? Oh, we're here. Interesting. Irene, that's way too many drawings on here. Irene, bottom of the range here. It doesn't look like down a whole lot, down a couple bucks off earnings. Take that as a win if you're in Irene. BE, I don't know if BE reported yet. Did they? No, it's flat. Wouldn't be flat. So BE still to report. Microchip he mentioned. You're going to start to get a lot of the interesting underbelly names. What's up, Mario? So I'm all good, Mario, too, screen-wise and voice-wise. Everything cool? Microchip's not doing anything. He said Microchip? MPWR reported that thing's a beast. All right, perfect. Thank you, Mario. That was up, now flat. Anything not down, I think you take as a win right now. Obviously, unless you're short. All right. And BE is the only other interesting name I'm kind of waiting on, but I don't need to wait for it. If anybody sees BE come out, give me a heads up and we'll quickly look at it. All right. So where do I want to start here? It's time, right? Where to start? All right. Just to get everybody caught up, I like to do a quick rewind, just to kind of get everybody caught up to where we kind of left off as we strolled into earnings season here. Okay. And again, just to touch on some of the more important things. All right. And it goes back to October, right? Because what happened in October, and if you remember our conversation back then, we were obviously a lot more cautious on things than we've been at any point in, since the April lows, because of a lot of the price action and sentiment and positioning that started to unfold more on the speculative side, right? So a lot of the heat was mostly in these kind of big AI names, and then you had these, again, I call them underbelly theme plays. They got a million different names, right? They fall under, they've been in a momentum basket, but the BEs of the world, Irene, APLD, Oklo. So you had a lot of these names. Again, the fundamentals weren't there. Story stocks, great stories, right? Tied to AI, data center plays, space stocks. So different pockets. But a lot of these mineral commodity names, right? Because of Trump. So you had really the ingredients of a blow off top, right? At least intermediate term, if not a major one in October, right? Again, I know most of you are aware of it. We talked about it numerous times. But I think it's important to kind of rehash that because I think we're kind of seeing the next stage in a lot of this stuff now, right? So if you remember, we talked about once these names top out, and we don't know for sure, obviously, if they were going to top out after they made us nervous. It just happened to be a few weeks later or whatever it is. But after they top out and correct, and they corrected quite aggressively, you get a little bit of a window where these names can be traded again, right? Where they, again, if the sell-off's aggressive enough, they come in violently, too quick, and then you see buyers, you see shorts, buying calls to kind of protect some of their profits. So you get a little bit of stability, right? And what's important at that juncture is to kind of remember how these things play out. Because a lot of times, and trust me, I have fallen into that trap because I like trading these names as well. You think because these things have corrected so much, 50, 60% off the highs, once they bottom and they find some bullish momentum, that it's off to the races again, right? Everybody looks to the left of the chart, sees big move, and says, here we go, another one coming, right? But the important thing to acknowledge is that blow off top is significant, especially after the dynamics change, right? And again, I don't want to get too in the weeds here, but the liquidity backdrop changed, and that's kind of why they had that blow off top in October, all right? So we are so trained to look to the left and kind of relive the good days in a lot of these things, thinking that they're just going to trade the same way again. And the majority of the time they do not, right? We talked about, and you can see some of the drawings on here. That's why I pulled this up. We talked about the most bullish case. The most bullish case would be that a name would find a low and actually trade in probably a lengthy range. It could be a wide range, right? But the bullish case is it trades in a range where the flow starts to dry up. People lose interest. They get frustrated, right? Chasing strength, and then the stock reverses. So that's important to remember as you're going through it, so you don't fall into the trap of putting a ring on their finger again and thinking that you can hold these things for the next 2 quarters and make money, right? On top of that, which is just as important, is that it becomes more difficult to trade these names. There's a lot of random action, right? And we'll talk about that because, again, this has been a really random market overall, and I think it's an important factor of what's been going on now. But you get randomness. Like, for example, an APLD, right, will catch some flow and then kind of rip to test highs again. But the names that used to move with an APLD, aren't moving as well. Right? Some are dead. Some, are trading lower. And again, it's kind of hit or miss, right? And if you look at the charts, like all of them, you look like an OCLO, you never really had that relief, right? This is kind of the relief stage here. You never really had much relief. In where, an APLD, obviously one of the better ones, Irene, had a decent move for as far as the trade is concerned, BE, right? So all different. Rigetti, Quantum was a big part, right? Kind of no bounce there. So you get that, this is that relief stage. And then what usually happens, you get that next stage, right? Kind of a resolution to that little bit of a breather. And like I said, the most bullish case a lot of times will be they'll find a range and hang out in. But even more importantly, I think a great sign usually when that takes place is the action dies down and people lose interest, right? So you're not seeing the call activity anymore. And that the reason, through a contrarian point of view, the reason that becomes bullish is a lot of people probably got shaken out of it. if you see the activity still linger, which we really did, right? A lot of these names still catching flow. That's usually a tell that these things need more time, or there's probably another leg lower. Okay. So again, I did a fast forward, rapid fire through that whole thing just to get everybody caught up to kind of where it all started in October with a lot of these names. Okay. So after this stuff corrected and blew off, you had a rush into kind of the mega cap AI names going into earnings. Right. So they came out of the spec names, they went into the mega cap AI names, right? Last quarter. They ripped into earnings. Then some bombs went off. Meta, Microsoft, disappointments. All right. They overspent for whatever reason. Those stocks got hit. Okay. Then that hot money came out of that camp, moved to now the cyclicals. And that's kind of where a lot of us have been hanging out, right? That's where we've been focused. That's where the risk reward has been extremely favorable on the positioning side of things, right? And then you had this huge rush come into cyclicals, especially as the calendar flipped into 2026 here. The metals, gold and silver exploded, copper exploded, Freeport McNamara, FCX, which couldn't get out of its own way, huge move. And then you start to see kind of this bubble type action chase in the metals, right? They run into a brick wall recently. If you haven't been around and live under a rock, right? Silver, gold, all again, explosion, blow off type moves. Finally see some selling, come down hard, right? The escalator up, elevator down, whatever saying you want to put on it. Okay. So little by little, what I'm getting at is from that October point where we started to worry about things. Okay. This market has done a good job of solving the issues that we are concerned about. Okay. The only problem has been that hot money continues to find a home, and we have another issue to deal with. Right? Like right now, you can make the argument that the semis are in that camp. Right? So you get these kind of rotating corrections from pocket to pocket to pocket. And that's generally what we've been seeing. Okay, from literally that point in October to now, you get these rotating corrections, and it goes from camp to camp to camp until the job finally gets done. Okay, where I think we're at now, and this is kind of, again, half of me was hoping to try to avoid it. The other half of me was saying, that could end up setting up something really nice on the other side. I think now these cyclicals, okay, and we're already starting to see pieces of it more on the commodity side, but the cyclicals now are part of that group that needs to be rinsed. Okay. Now, again, I don't think they have to be nearly as rinsed as some of the underbelly growth names, the more speculative names, or anything else that's overowned, right? Because they're not overowned. But usually what happens is when you get this rotating correction, it usually hits all spots before it's done. Okay? Now, the catalyst for it, and we were talking about this on the last couple of webinars, member-only webinars on Sunday, if you guys remember. You got to think, because cyclicals are economically sensitive, right? What's really been driving the rally in cyclicals of more recent, and think of, again, half of the Russell, the industrials, right? We talked about that. The economically sensitive groups has been the resilience behind the economy, the strength in the economy. Okay? So again, the appealing part about the setup in the cyclicals coming into this year was that it could go either way. If the fundamentals of the economy start to deteriorate, the Fed's going to come to the rescue, right? You get more rate cuts, an easier Fed, a favorable Fed, and that's an excuse for people for these funds to step into cyclicals because they have no exposure there. If the economy is resilient and starts to show strength, okay, you want to own cyclicals, right? So either way it went, you had a great setup for a big part of the market that was underowned. I think now the issue becomes the driver of the rally in cyclicals has been economic strength. Okay. And I think almost too much on the economic strength side. In other words, people really buying into the economy, right? They were huge doubters on the economy. We need rate cuts. We need rate cuts. The job market, this, that. And then all of a sudden now everyone's buying into, well, I shouldn't say everyone. More people are buying into the economic strength and wanting to have cyclical exposure, okay? What it does is sets you up for a disappointment, right? So if the economic data that starts to come in and starts to disappoint, that's going to create selling in the cyclicals that have had a nice move here, okay? So, and I want to line this up so we can go into some of the signals that we look on a week-to-week basis, because they tell us a lot of the story, right? Instead of us trying to figure this stuff out, the stuff we look at week in, week out on this webinar, that's the stuff that really tell us whether what we're seeing or what we think about is confirmed, all right? So what we would start seeing is not only the job data, the economic data or job data start to disappoint, not live up to expectations in a sense, okay? You'll start to see financial conditions which were extremely loose, right? Extremely loose. And easy financial conditions, again, another excuse to get long cyclicals, especially if you don't have exposure there, right? If financial conditions start to tighten, you're likely going to see some selling in the cyclicals, right? So what I'm getting at is that's likely where we're at right now, is that we probably need to see that part of whatever this kind of correction that's been rotating around. We still need to see that get done. And then once that's done, I think that likely will be our next best entry and possibly set up a decent tailwind whenever that shows up. Now, again, you know, is this the start of it today? We got the job data that came out today. We saw some selling, right? The cyclicals, which were red hot all week, saw some selling today, certain parts more than others. Financial conditions have tightened this week, okay, which we'll look at in a second. That would be great if it's here now. Okay, the quicker the better. Let it happen. And then once it's done, we're in a much better position. Okay, so that's first. That's been the playbook that we've been touching on week in, week out. We've been talking about in the Steam Room, obviously, but even on this Thursday webinar, that's been the main thesis. And for us looking for confirmation from the market signals, okay? You have another wild card here that's entered the mix, okay? That again, you can't forecast these things, but when they show up, they're going to have an effect. You have aggressive selling in a lot of different things out there. Now, granted, hopefully things that you guys aren't involved in a heavy way. If you are a member of the Steam Room and been on this webinar, these have been areas to avoid literally since October in any meaningful way, okay? But even if you're not in these areas, the selling has been so aggressive that it's likely going to have an effect on other things, okay? You get kind of that forced selling, that margin selling. So in other words, if I'm up to my eyeballs in Bitcoin and crypto related shit, right? Or the APPs of the world and all those high growth AI names that can't catch a bid, or Oracle, okay? I likely need to sell other stuff that I may not want to sell that's been doing well because of margin calls and all that stuff, right? So you get that forced selling. So that's another part another piece, I should say, that's likely going to play a part here. Okay. Not to mention the software sector that's literally lit on fire right now. That can't catch a bid. Right. So you got a crash, right? Like somewhat of a crash in a huge tech sector, software sector, where a lot of bulls have been hanging out for years, but not traders. Traders have been avoiding software for a while. It's been underperformer. Hedge funds are actually short there. But you got a lot of longer term money that's been in that stuff since the COVID days. Okay. So that also is likely to play a part here. Okay. This is what we're dealing with right now. And this is what we need to get resolved. And once it does get resolved, on the other side of it, I think our game plan goes right back to where it started. And on top of that, if you do get a little economic weakness, that would be the best thing, right? So if you get the job numbers that continue to disappoint, and I don't know when NFP comes out, they postponed it and they rescheduled it, I think next week, I think. But if you get the job number continuing to show some cracks, that's going to get the Fed back in the game here, right? That's going to get the market pricing in rate cuts again here. Okay. Now, that may not be that beneficial for the speculative stuff out there. Because again, rate cuts and liquidity are two different animals, right? But for the cyclical camp, that's huge and could provide a huge tailwind for the remainder of the year. Okay. Right now, rate cuts have been priced out. Nobody's talking about rate cuts at all anymore. Right. So that would be a great thing to get that back into the picture during this kind of mop-up phase we're in. All right. Again, fortunately, coming into this earnings season, and I know that, sometimes degenerates, they can't really, get a grasp on things and rein it in when they need to rein it in. There's been stuff to play out there. Okay. That's been kind of the annoying part about all of this is, even being in the earnings season, there's some, the cyclicals were on fire. There are definitely opportunities there, right? There's stuff that you want to get involved in. But at the same time, you want to be smart about things as we're coming into earnings season. And some of the signals we're looking at are telling us, you know what? It's actually it lines up perfectly for a time to chill out and let's see how this shakes out. Okay. And this is what I mean by that. Okay. This is what we've kind of been battling here as we've gone into earnings season. Okay. This is volatility. A few things we look at: VIX, VVIX, TDEX. VVIX is inverted there. And again, we've talked about this divergence that's kind of been lingering. Right. So even as, again, depending on what index you look at, but even as the S&P 500, the industrial at times, the Russell at times has been pushing to new highs. We just made a new high on the S&P earlier this week, right? VIX has, the whole vol complex has made higher lows, right? And you can see how that's happened here. Same with VVIX, same with TDEX, okay? That's usually an early warning sign, at the least, that the move in equities is not clean, right? From our perspective. It's not the ideal type of risk on rally we want to see. Okay. So that's been lingering here. Credit, honestly, you've had a little divergence there, but I don't want to make a big deal out of it because depending on what index you look at, the divergence has been a little worse than others. But again, you have if you take the S&P 500, making new highs and kind of credit spreads and swaps, well, some of the proxies we look at have not. Okay. Some have, some have not. So kind of mixed picture there. I think credit has been signaling to us more of a choppy rotation type market than anything else. Okay. No warning signals there. This has been the big one. And you guys know we've been talking about this now for a bit. We like to look at these correlation indicators, right? Because what happens is when they get down to certain areas, Okay. There's a lot more risk out there, a lot more randomness out there, and your reward is not there. All right. So it's foolish to stick out your neck and get aggressive when stuff like this is telling you you should be doing otherwise. All right. So we've been dancing down at that at this kind of concern level, warning level in correlation. And every time we kind of kiss it or breach it, we get a rinse a day or two later. Okay. We just got down there earlier this week. And now you got a rinse and you can see the jump in correlation. All right. And VIX moves with it. So, the question, and we touched on this a couple of webinars ago, the question now becomes, right, are we getting something similar to what we got just back in November? Right? Which even that sets up a nice window of a multi-week rally squeeze when it comes. Or is because of all this crap that's going on around us, right? The carnage out there in a lot of different pockets of tech. Are we in store for something larger like this? And that's what I think we got to keep an eye out for. That's where I think we got to keep, we got to look for clues in the things we look at on a day-to-day basis to try to determine whether, the forced selling out there is just a lot too much to deal with, or, this is just something we're going to put a Band-Aid on and kind of get through, right? Because that's ultimately what's going to happen is you're going to kind of put a Band-Aid on. So what you get is you get relief out of certain areas of tech, kind of what we just saw, basically. You get some relief over the next month or two out of tech, right? If the cyclicals finally rinse, the cyclicals will lead again and rally. So you kind of get that high participation, broader type rally for a few weeks, maybe a month. And then we're going to deal with the same shit we were dealing with now. Right? Correlations drift right back down to here. The internals are going to start to deteriorate, and we're going to be talking about the same issues. Okay. If you do get kind of that full cleansing, then like I said earlier, you have that's the next best entry, in my opinion, from the April lows. But I told you, and no one's going to try to convince me any different that anybody can figure this out. We really don't know how any of this tech stuff, AI stuff is going to shake out. It's new to everybody. You have some similarities to 2000 already, and you got some similarities to 1998. But the truth of the matter is, it's probably not 98 or 2000. Something completely different. So we want to we want to let the market do the talking. We let the signals do the talking, and we do the listening along the way. All right. Ideally, if the selling lingers and there's a little more than we thought initially, that's where a lot of these kind of big picture indicators that we focus on, again, same blueprint from back in April, will come into play. And that's what's going to give us a good idea of how much is left of the selling and whether we should start dipping our beak or not. Right? As well as obviously the flow and stuff like that. Okay. Right now you have kind of, and this again, we talked about it Sunday, you can make the argument on both sides. You really can. You can make the argument that we're going to see something like this, which we already kind of have, or we need to see something like this. Because if you look at some of the other stuff out there on the positioning side of things, you got some heat. All right, so let's look at that quickly. Here are financial conditions. All right, so we've been lingering here, right? Dead financial conditions. Again, loose is the term, or easy financial conditions. And you can see this week, even before today, we started to tighten up a bit. All right, we're back at where we were back in that November pull. Okay. Again, this was the lead up to April. Okay. This. So this is nothing major yet at all, but it's something different than what we've been seeing. That's all. Here's a good indication. You want to know like how random this market has been or how mixed this market has been. This is new highs and new lows. So new high list and new low list both have been moving higher. Right? So you've had breakdowns and you've had breakouts. Okay. That again, that's unusual. Right? This was in November. And you kind of had new highs roll over a little bit, and you saw new lows elevate. Right? Here was the correction, and you can see the huge spike in new lows back in April. Okay, both of them moving higher here up until today. Basically, it's a good indication of how mixed this market has been, bullish and bearish. We'll talk about some of this short-term stuff because off today's selling, you're going to be pretty close to squeeze signals already, if not there, on some of these short-term signals. So we'll talk about that quickly at the end. Again, that's for trading purposes. Here's some of the stuff that's heated, right? Let me show you. Hedge fund exposure finally popped up here recently, and probably because they were forced to buy cyclicals, I would guess. Okay, so they got a little bit aggressive here. Probably takes a week of selling before they start to spit that up, but they haven't done that in a while. All right, first time since the April lows. Retail has been kind of the problem here. Let me show you retail. Where is it? I put it in. Hold on. Bear with me. Citadel has a nice indicator that kind of slaps you in the face. Here it is. So this is Citadel's retail risk on, risk off gauge. And this has been overheated for couple of weeks now. The BOVA bull bear indicator, if you remember, we looked at the new one anyhow, that's been on sell signal. So indicating we might see tactically a rinse. Okay. Here's speaking of BOVA, here's the recent flows. And the institutional side has been dumping and retail has been buying. So you got institutions selling to retail here. Okay. Here's another look of institutions kind of reining it in, right? We talked about Sharpies too, but we like to look at this from Goldman, funding spreads. Oh. That should be enough, right? Let's see. Funding. Oh. Here it is. Okay, again, we looked at this last couple of weeks, but very similar to the Sharpie data we get, the commercial hedgers. You can see they've taken down risk here, right, over the last few weeks. Okay, usually when they when they get aggressive, you see these big spikes. Okay, here is in before the correction in April, similar. They started taking down risk into the highs for a few weeks. All right, so again, something to keep. These things are some of the things we want to keep an eye on. If some selling and volatility linger here, because these things will be cues to telling us whether the smart money is starting to fill out some buy tickets again. Let me X this out. Some of the short-term stuff we look at, this is kind of not as short-term as some of the other things we look at, but the short-term composite indicator got up to almost 80, pretty hot. Now it's down in the 40s. After today, hopefully it's even lower. Under 10 is a good area to start looking for snapback rallies. Okay. So again, this is all good if we get there. Here's again, you want to see mess? Let me give you an updated version. Okay, this is coming into today, by the way. I like to look at this as far as like the internals of the market. So think of red, overheated, overbought, green, oversold. Yeah, it's kind of hysterical. So you got oversold tech, as you would think, right? You got some pockets of green here. And look at the overheated groups: energy, materials, staples, utes, industrials, Dow industrials, some SPY. IWM has recently cooled off, so that's not red anymore. Financials have cooled off a little bit. Okay, so this is kind of what coming in today. This is what we're dealing with. The stuff that they needed to rotate into to kind of prevent a market pullback is the stuff that they still are selling aggressively, right? Like Oracle can't catch a bid. I know some names like Meta caught a bid today. I think Netflix caught a bid today. Right? So that's probably even more so. That's probably what we're likely to see. Even the software names, like they probably, if we do go into something like a correction, the software names probably show some signs of exhaustion on the downside before anything else at this point. I mean, they're in crash mode. All right, but we have to, this is some heat to deal with on the stuff that we like. That's kind of the issue. This is the stuff that we've been able to kind of dodge some of the landmines out there. All right, so that's not what we want. What else is there? Anything else on what was the thing I wanted to touch on? Oh, the put the call. So you got here some of the short-term stuff out there. Put the call. You got a nice little pop today. If especially tomorrow, if you get a little more selling off the open, which it looks like in Amazon, and this kind of sees follow through, that's usually a pretty good spot to start looking for squeezes. It doesn't mean the market bottoms right there and then, but usually you get a spike in the put the call and some sort of relief follows. May not nail the absolute bottom on an intermediate term, but usually there's a decent squeeze. Okay. One more thing. Again, there's a million things, but I don't want to make you guys dizzy. But again, there's so many moving parts. The other thing that has kind of been on the back shelf, we really didn't need to worry about until we start to see some selling, and that's that systematic fund stuff, right? As you guys know, I posted on Twitter, and you guys in the room know that short-term trigger was breached. Was it yesterday? I think it was yesterday. SPX, right? Do I have it on my screen here? Oh, I have it on my other computer, I think. Yeah, I have it on my other computer. 6,900 SPX. That was the short-term trigger for CTAs. And the other one's around 6,700, if I'm not mistaken. Here it is. 6,692. Is that updated? I think so. So 6,900 was the short term. This is the big one. I say the big one because a lot of times what that gets, it gets these CTA trend following funds from long to short. You understand? Right now, they're just trimming long exposure. They're just trimming long exposure. This medium-term level is a level where they start to not only take off the long exposure, but start to add shorts. And you see these weekly flows start to flip bearish. All right, so you have that supply hitting the market. It, not only into downside, into squeeze attempts as well. So it becomes an issue. All right. So these guys, we didn't even have to, we were fortunate we didn't have to worry about these guys. They've had a full tank of long exposure for a long time now. Do I have a chart showing that? How is it not I should have a chart somewhere. Is this it? Oh yeah, this is good enough chart here. Again, don't pay attention to this. This is old here. I'm showing this chart on the bottom. Okay, so the blue is CTA exposure. You can see they're pretty much tapped out on the long side. All right. So again, eventually we were going to have to deal with this stuff eventually at some point anyway. You know what I mean? Sometimes the market can do a good job of kind of kicking the can down a road a little bit longer, buy us some more time, and that still could be the case here now. Still could be the case here now. But in all likelihood, at some point, we're going to deal with a correction. We're going to deal with a correction. That's the inevitable. So, you, especially if you're holding on to some long exposure, you never like a correction while you're long, but you rather deal with it as early as possible because the sooner the better. And you think about it, like the retail psyche out there, and you guys know they buy every dip, right? They're all in the same stuff. It's comedy, If it's not the Aklos and the Rigettis of the world, while these things are running, it's the Trump rare earth mineral stocks. Once they crash, right, they move on. Then they're in gold and silver now. It never ends, it seems. It never ends. All right, so now, again, I don't wish pain on anybody, but they're taking it on the chin in Bitcoin. They're probably already feeling some pain in the metals. And ultimately, it ends up being a bullish thing. The other thing we talked about, if you remember, kind of the flows, right? Remember us talking about those huge flows coming in? Like, it doesn't have to mark a top of the market, but you deal with some volatility. Where is it? Oh man, flows is a bad word, huh? There's too many flows. I can't wait till we get this update. So it's so much more efficient here to search. Where's fund flows? Forget it. It's not even worth it. But you guys know what I'm talking about. Sharpies, here's Sharpies. I know you guys always are asking for a Sharpie update. That's what Sharpies look like overall right now. So hedged, but they haven't been too aggressive of recent here. Right? So we'll see what they do from here. And maybe we get a little pullback and they get long. That would be good. So, but it's an interesting market, man. It's an interesting market. Again, I say interesting. It's not a fun market to play. I know personally, for me, anything I've tried giving an extra day or an extra day, literally, I was going to say or so, an extra day of follow through, I run into a brick wall. Everything, even the cyclical stuff. It's amazing. I've had some success day trading some of this stuff. There's been decent momentum. But again, I'm not getting rich day trading, just scalping here and there. But these low correlation markets, especially when you got stuff blowing up all around you, they're not easy. They're not easy. So we don't want this to linger. And that's what the kind of the point I was making to you guys, for the last couple of weeks, right? And maybe it's just I look at it differently because I'm an old man now. But when I see this down here, there's just no reason for me to get excited. You understand? It's like I call it dodging landmines. I get a little aggressive, something I like, goes up the next day, and then all of a sudden, boom, you get that correlation rinse in the market that takes down everything. It's just a pain in the ass. So there's been stuff to play, right? The cyclicals have been so hot, and the names we've been talking about that we kind of want to focus on. There's been some really nice moves in them that it's been worth trying to play these names. Some of you have made really nice money. Right? FedEx, the UPSs of the world. Some of you have killed it in those names. So it's been worth participating. And that's kind of the difference here, right? As opposed to like early last year where it really just made sense to get into all cash. You had a rotation into cyclicals that's been really aggressive and profitable. I just think right now, there's risk there as well. We want to buy that stuff off of pullback now. That's the best way to put it. That's the best way to put it. I can't phrase it any different. Right? Any cyclical you like, you want to try to buy off a pullback here. Maybe some of them don't pull back or don't pull back as much. What are you going to do? But if you want to be smart about it, you want to try to buy them off a pullback. And trust me, I know it's difficult. Like the trannies have broken out and they still look like they want to go higher. Right? And they got nothing to do with any of the stuff that's being sold aggressively. But the problem is of what I mentioned earlier. If you get a highly correlated sell-off, that usually means there's forced selling and they end up selling everything. Yeah, NASDAQ Sharpies have been hedged in NASDAQ for a bit now. For a bit. I mean, for obvious reasons, for obvious reasons, the option. Again, the tech stuff is just tricky for me. I'm just, again, because it's been so overcrowded, I can't get excited about it yet. Cyclicals and the rest of the market still where I think the opportunity is. I just think you need a rinse there now. And if you get kind of a little bit of a growth scare type of thing with the rinse and cyclicals, that kind of you reel in the Fed again, I think that sets up things lovely, right? You get the pullback and you get the juice. Okay. One thing on liquidity, right? And I'm no liquidity buff. You guys know that, right? I look to other sources to get updates on liquidity and stuff like that. But one thing I just want to talk about, rate cuts and kind of liquidity that a lot of us claim is the juice that kind of gets the more speculative areas of the market junked up are two different things. QE and rate cuts. QE is a lot bigger deal than rate cuts when it comes to those names. Now, again, I'm not saying that it's playing a huge factor here, because if this, from my sources, liquidity is not shit in the bed. Excuse my French. It's just kind of popped out, right? If you remember, that was part of the problem in October, right? So think of a chart of liquidity without me trying to dig it up, looking like this. And then, okay, well, this was October. So while all the spec stuff was going parabolic, Bitcoin already started to deteriorate. Liquidity was rolling over, and you still had Oklo, Rigetti, Iron, all these names going bananas. Right? That was, you couldn't get more of a red flag. So then liquidity now has done this, and it's kind of just sat here now. Okay. But some of the people I talk to are making the claim that the high for liquidity is probably in. In other words, you're not going to get this again. You're not going to get that expansion that juiced Bitcoin and all these speculative things. Okay, that's one. Two is the new Fed chair, and that's where these things really starting to unravel. The guy Trump ended up picking for new Fed chair. He is against QE in a big way. He wants to reel in the balance sheet, as most of you know. Now, you would say, well, why would Trump pick him? Because even Besant is not, he thinks that's part of the problem with the U.S. economy, right? Is the Fed's balance sheet and QE and all this stuff got speculative manias all over the place. I mean, look at gold and silver, for Christ's sake. So what this new Fed chair ultimately is hoping to do is rein in the balance sheet, but keep rates low. You understand? So, if you're wondering why would Trump and Besant pick this guy, he's willing to cut rates. And as a matter of fact, Trump said in an interview, if he said he's not willing to cut rates, I wouldn't have hired him. You know? So he claims by reining in the balance sheet, gradually you can keep interest rates low. And that's how you get a strong economy. Okay? What's that good for? Cyclicals. Right? Liquidity chart. I think I have a liquidity chart from Howell that I posted recently. Let me see. I could have just typed in liquidity. Oh, here it is. So this is kind of the 3-month change, and this is the year change, right? So Howell's making the point that this here is likely a top. You understand? In this cycle. That this shouldn't, the orange line in particular, which is the 12-month change, shouldn't plummet, but likely the highs are in, right? So this is kind of what you've dealt with now, Bitcoin being heavy, the spec names, the quantum names, all that crap, why they've been sold pretty aggressively from October is because, again, the change in liquidity over 3 months has been a drain. You know? So, again, guys, for me, and I always like to kind of show you guys this and then kind of share what I'm doing. But again, I know I'm a lot more conservative at this point in my life than the majority of you, especially you youngins. So what I do, you may want to have an idea of what I'm doing, but again, if you're younger, you probably want to be more aggressive than I am. But for me, kind of my game plan here really hasn't changed much. The only thing that's changed is possibly that I wanted to be a buyer of some cyclicals post earnings here. But again, the problem with the majority of these cyclical names is a lot of them, because they've gone to mostly the leaders in most areas, they've had huge moves. huge moves, you know? So we've discussed this even prior to now, right? I want to be prudent about it. I want to buy these things off pullback, you know? I want to buy these things off pullbacks. Again, I think this is a 2026 thing. Yeah, I could be wrong. We'll see how it shakes out. But this is not a mania, a chase that is short lived, and I need to make as much money now because it's done. That's not how I'm looking at it. You know, if it is, that's not bullish. That's, I think, a big problem for the whole market. You understand? If it's a short-term chase. So, you got some big time breakouts out there in what? What are we in? February, January, December, November? Yeah, okay. So 2-3 months, but you got huge breakouts. Right? Like this one I got up here. The trainees are breaking out. Like this is one of the worst cyclical groups. I know you guys like FedEx and UPS. Many of you on this webinar, on the Thursday webinar, have asked me about and like as far as in the group. Look at this move in FedEx. Huh? So while Oracle shits the bed, Rigetti and Oklo are going to zero, FedEx, I mean, look at that. Right? And even UPS, the laggard. Hey, right? This is not no move here. Some of the early names to catch flow and break out, Hasbro. Look at this move. Okay, this was one of the early names to catch sweeper activity, cyclical, off October, and the breakout. Look at that. STLD. Well, I mean, look at this STLD. Like these things didn't even flinch today, guys. Look at the equal weight S&P 500. Okay, look at it. Look at it. So if you've been in this area, even if you own some tech, if you've been fortunate enough to be in this area the last 3 months, at the least you probably offset some of your tech losses, if not made money overall. One of the groups I'm trying to get my hands on here has been a serious laggard. The home builders, as you guys know, I added a little more. I day traded a nail earlier in the week, and I left some equity over. I would like to get my hands on names. I know a couple people in the steam room. I think Brahma bought Lennar. Builder is a name I'm interested in. I'm going to look at post earnings. So this is the stuff kind of if the market does pull, and maybe you get a little weakness here too. I think this is just as in play as it was before, and it'll be even more so if you get the Fed back in our corner. Well, RSP is not. It's not a mover. It's not a stock. This is the S&P 500. It's not a slow mover. It's the S&P 500. So in other words, if you take all the S&P 500 stocks and weigh them equally, that's RSP. So if you overlay it, you're getting huge outperformance here. If you take RSP and overlay it with NASDAQ, you're giving more outperformance. You're not going to get a 300% return on RSP. It's an index. You know what I mean? It's just a good measure on the true market. You understand? This is the true universe of stocks right here, RSP. It's not the S&P 500, because the S&P 500, 6 names have a huge weighting in the S&P 500. This is the true universe of stocks out there. And this is, I showed you guys this. This is interesting too, because, I'm dealing with it. But again, I'm not complaining because I made nice money and obviously I'm sitting on nice cushion. So trust me, I'm not complaining. But the Russell, what you got to deal with, the Russell 2000, and you can see it's having it's weighing on it now. You got crap in the Russell 2000. So you got, let's say, half the index in cyclicals, and you got a piece of it in the crap names in the Russell 2000. Okay, if you want the quality of the small caps, right, even just to get a good measure on them, SPSM. So these, if I'm not mistaken, this is profitable small caps. All right, and this, in my opinion, this should continue to do well. All right. And again, which is the cyclical bull market, right? If we can call it that, which I think we can at this point, it just started. Okay. Can it come to an abrupt end? Somehow, of course it can. I mean, if COVID 2.0 shows up, it probably will. Not it probably, it will. Okay. But with the information we have in front of us now, this is just, the cyclical bull market is just getting started here. Just getting started, in my opinion. Okay, if it falters, I think the whole entire everything falters, right? It's a problem for everything. Oh no, I mean, listen, if it's the S&P 500, so it's the same thing. AB, I don't know what you're looking at, how you measure it. Like, if you trade the S&P 500, you're probably going to see better percentage gains on RSP, no matter what you're trading, how you're trading it. You follow me? Like, if you're buying SPY ever, then RSP has been the better play. You're making more money percentage-wise on RSP than you're making on SPY. You follow? You got to look at it percentage-wise. Like, SPY is what, right? SPY is $700, $680. That's why point-wise it moves a little bit more, but percentage-wise. By the way, RSP, speaking of RSP, let's see. Yeah, SPX, you got body bait. Well, the Sahil, because they're all in the same stuff for 3 straight years now. And the stuff they're in is being lit on fire. You know what I mean? They don't own the cyclical part of the S&P 500 that's holding it up at 6,600, 6,800. They own the stuff that's been moving and been hot. They all are in the same shit. That's the problem. Go look on X, on Twitter. They all own the same stuff. I don't even follow these guys. They show up in my timeline. They come across like they sound like geniuses. You want to make money in the markets? Not that hard. The White House tells you what to buy. Data centers, Oklo, Irene, blah, blah, blah. Space, RKLB, and literally I see 50 in a row of the same exact shit. Now, I don't know if it's coming from the same source. Maybe it's coming from the same source, but literally 50 different posts with the same type of tweet. Own crypto, owning names, whatever the they call the MSTRs of the world. They're all in the same exact stuff. And they've been buying and buying dips and dips and dips and dips and dips. But that's how it usually goes. We talked about it, constantly, you and I. We've been talking about it for ages now. Here's the RSP buyer today. Now, again, he could be short SPY. You know what I mean? That's kind of the problem here. He could be short the Qs. Right? If you really wanted to take to AB's point, like if RSP is not enough movement for you, the trade has been short NASDAQ, long RSP. Business contact, again, it's not a market-wide issue. Here's the market. I'm not trying to be a wise guy about it. You're seeing the major selling in the market. Here is the chart of the S&P 500, the 500 companies in the S&P 500. Here it is. You're looking at it. Okay? What you're probably looking at is a chart like this. And, again, if you've been on this webinar, when this happens, ultimately, this is going to happen. There's not 2,000 names with zero revenue going to $5,000. So, this is the stuff, right? All the stuff that had moves like this, the majority of it is feeling pain right now. Right? Like even the quality, guys, even the quality stuff, like Oracle's got headaches. Okay? Look at this move. Like, this is Oracle. This is not RGTI with a 2 million share float. This is Oracle. Look at this. You still have stocks out there. And again, they're far from a Rigetti. The fundamentals support the move in stocks that are moving out there. But the problem is, it's not going to last forever. Things don't last forever. Like, look at this. Right? So SanDisk does this for another year, it's going to be at $10,000 a share. You understand? It's not happening. It's not happening. Whether it's next week, next month, 3 months, 4 months, eventually you're going to see it go south. I'm not giving any inside information here. Most of you know that already. This is a parabolic move. These moves can't last forever. This is just how the market works. But you need this to happen. You need it. Okay, when it doesn't happen, it doesn't take away the risk from the market. It just adds more risk to the market. When you got a gazillion stocks doing this, that's adding risk to the market. In my opinion, now this is taking risk out of the market. Because this is going to happen. At some point, it's going to happen. There's no way around it, especially if you don't have any fundamentals at all. Yeah, exactly. There's a shortage, and but again, it's helping these names fundamentally. They're reporting earnings. They're knocking the cover off the ball. But again, it's not going to last forever. That's the only point I'm making. It's not going to last forever. Good luck trying to pick the top, but it's not going to last forever. you know. So to answer whoever's question that was, what's my opinion on the major market sell-off? Yeah, I don't look at it as a major market sell-off. I look at it as a sell-off and stuff that got way too carried away and was bound to happen. And that's a good thing that the process has taken place there. You know, what you're seeing is the indexes, right? And the NASDAQ, and yes, again, this is not major, this is not a major sell-off. At some point, at some point this year, okay, just the probability, the numbers tell you you're going to have a 10% correction at the least. That's just the way it goes. You know? But again, that's not a bad, it's a bad thing if you're long out your eyeballs of new risk up here. Yeah, it's a bad thing. But if you've been managing your risk and being smart about things, these corrections, that's what presents these opportunities. All right. Think about it again off the April lows. This whole move. Think about what took place in this whole move. All right. What gave birth to that was this. The longer in the game, you're going to realize that the high risk reward setups, where more often than not, I'm not going to say always, because you could have got long silver 3 months ago because you liked it, and that's been your biggest winner. Okay, so there are exceptions, but as a whole, you're going to realize the longer you're in the game, at some point, that the bulk of your money that you're going to make is off these sweet spots, off these corrections. Because what you're going to learn is no matter how big the moves may be, you'll still participate, but you're likely going to be more focused on managing your risk up here than getting aggressive and taking new risk. If you don't, what's going to happen is you're going to make money on the way up, but as soon as the market does this, you're going to give it all back and then some. If you don't take that approach, you may have gotten away with it this time. You may get away with it the next time, but it only takes one time to get caught, right? One time, right? If you're buying here, especially these days, the way you guys play options, and you're buying front month, if not weekly, for Christ's sake, but you're buying front month calls here, and you get caught in this, that basket's lit on fire, never coming back. Poof, gone. And likely all the money you made here will be gone by this point here. So, this year we're a month in, right? For this month, honestly, I haven't been doing a whole lot. I've taken some stuff off the table that I was holding on to. I got some key positions that I'm holding longer term that I'm not going to touch. But what I'm focusing on this year, my goal is to focus on like I said, the cyclical part of this index. Not the names that everyone's looking at and wondering when they're going to bottom right now. It's all the other stuff that people have been ignoring that I'm kind of zoning in on. You know, the other stuff again, I just I don't even have an opinion. But even if I had an opinion, my opinion's worth as much as yours or anybody else's. You know, is Oracle good to bottom? You know, is Meta good to bottom and go to new highs? I have no idea. Everybody and their mother's trying to figure that out. You know, I have no clue. I have no clue. So a lot of, again, the cyclical, and we talked about this, the cyclicals have been ripping, and the first stage of the cyclical rally are the leaders, right? Are the names you know about, especially in cyclicals, right? It's a lot different than growth. Are names you know about, you haven't traded in years and ages, if you ever traded them, and you had no intentions on buying because they've been dead money, right? Those are the first, as we said, those are the first batch of names that break out. It's never comfortable buying them. Even if you're bullish cyclicals, I can tell you from the horse's mouth, right? I've been as bullish as anybody out there cyclicals, and I still couldn't get myself to buy these names. But as that bull market takes fold, right, and trends, it spills over into other names. And that's usually where I start to pick up the money. You know what I mean? So, for example, like Freeport, okay, even as it was catching action, I couldn't get myself to buy Freeport. I couldn't, for obvious reasons. People have been burning their money in Freeport, feels like forever. It's a tough stock, right? No flow was enough. I wanted more flow, more flow, more flow. So I played an underbelly name in the same arena, ERO, and that's the name I ended up trading. You know what I mean? That's more of my style, is this type of stuff. But again, the first stage, the first couple of months of this rally have been all the leaders, right? You think steel stocks, what are the leaders? STLD, Nucor, right? All the leaders, copper, Freeport, even this tech I should have played. Well, I traded, but I should have played. It's the leaders that get the attention, right? Hasbro, the toy maker. Walmart. Have you looked at the chart of Walmart, by the way? Look at this. So, to answer your question, these type of names is what I'm looking to do in 2026. What I'm focused on. So, if you like a Walmart, you want a pullback, right? You want a pullback here now. Okay, there should be a pullback. You got earnings coming up at some point. There'll be a pullback, and that's where you want to look at Walmart if you like it. You know, there are industrial names out to wazoo that have been soaring. Here's a Yank and Cummins. You know, eventually you're going to get pullbacks in these things. These are enormous moves. Enormous moves. But nobody's long these things. You understand? That's the difference. Nobody's long these things. Right? Everybody and their mother's uncle's mother's sister's brother owns NVIDIA. Everybody. Which, by the way, they've been peppering puts in NVIDIA for a week straight. You know, but look, even this name was a really nice winner. So many of us have played this multiple times as an understatement. I haven't even played this name recently, and I played this name several times. But like, I mean, this move is psychotic. Even the recent move, psychotic. Like, look at this. Okay. What do you get, right? Correction, up, breakout. Here we go again already. 2 months, we're breaking out to new highs after a 500% move. Piss. And now you got an ugly double top there instead. You know, these names are just up too much. And again, APP, their numbers were sick. The growth in this name was sick on the way up. It wasn't like there was no growth fundamentally. Sick. Look at this. They're printing money. But the stock, okay, and by the way, here we were playing it back. Here is what I'm talking about. I haven't even played it over here. Right? The stock went from 20 to 750. 20 to 750. Okay, based off this ridiculous growth. This is normal. Like here's another one. I know a lot of you guys have liked this name. Really good name. CRDO. These were great names, but they've gone up too much, man. Way too much. Right? Again, maybe they could continue going on. I was saying that over here. Okay? Net, it went a little higher. But, I mean, you're playing musical chairs at that point. You understand? And again, numbers-wise, nothing wrong with this name. This name has been knocking the cover off the ball, growth-wise. Quarter after quarter. Look at 45% growth, 30% growth, 40% growth. You know what's funny, though? Back here, nobody was talking about it. You know what I mean? Or coming out of the April lows. Nobody. Yeah, like, but that's what I mean. Like, see, you're 100% right. Like, even this, even if it pushes, it grinds higher, like, it's still at risk of that, right? You still have a major risk of the same exact thing happening here. Again, it has nothing to do with fundamentals. Nothing. This is another company has been killing it. Killing it. Huge winner. It's just, look at this move, guys. Look at it. They're totally normal. The big money has been made in these things. You guys made a lot of money in these things. You guys have been talking about these names for ages. Sahil, we talk about it every webinar. Sahil was buying Onclo all the way down here. All the way down here. You know, eggs hatch. Yeah, that's the problem. Is that they become dead money, you know, these blue chippers. Because, you know, even like Nvidia is the stud of all studs. You know what I mean? Like, you can't say anything bad about Nvidia. I mean, Nvidia is everything. It's just kind of the point we were making, right? Here, okay, even before it went to new highs here, every fund, forget about retail, okay? Every institution that is bullish on Nvidia owns Nvidia, probably owns as much as they can buy. They're not even allowed to buy anymore. They're capped. You know what I mean? Like, there's been buying in Nvidia over the past 2 years straight because of what's been going on there. So now the only way some of these institutions can add is if they sell higher, they sell some, and they get a chance to buy it lower. The buying just dries up. And if you get some negative news or something negative, you get selling. So risk reward wise, it's a disaster. Now again, I'm talking about the way we look at a market, right? For investing purposes. And let me tell you, it's one of the hardest things to do because, we talk about it in the steam room constantly. You got to sit through all this stuff for investment purposes. If you're in NVIDIA and that's an investment, not a trade, an investment, you leave it alone. You got to sit through corrections. You got to sit through dead time. Right? That's why you invest in that name. You're not trading it, you're investing in it. But for us, like, I don't know about you guys, but if I was stuck in NVIDIA and I couldn't participate in all the other breakouts that were going on, I would have pulled my hair out of my head. Again, the way we look at the market, right? We're trading the market. And I mean, honestly, these days, the way we trade, some of us, it looks like investing to some. Now people are trading minute charts. But that's all that's going on. Again, listen, I don't have any advice to offer you guys. Those of you out there who, may own a name like this up at higher levels, up here, and now you're wondering what to do. There's no answer for you now. You understand? You should have cut it a long time ago. Even more importantly, you shouldn't have been buying up here. You take it as a lesson. And if you stick your hand in the fire in the future and do it again, you got nobody but to blame but yourself. But there's no easy answer for these things now. You understand? There's no easy answer. For flow wise, for those of us in the steam room, again, for trading purposes, if this thing finds a bottom and then we see a band of sweeper activity coming in for a trade, that's the extent of it right now. But you got a lot of carnage out there now, right? You got a lot of broken charts. What's crazy, some of these, you got like some of these names are just invincible right now. Like names like this. But they're not as over owned because nobody's even talking about this name. Light. You don't hear anybody talk about this name. But you still have some crazy strength out there that probably needs to get rinsed. The semis were up today. My pleasure, Mr. Stockholm. I enjoy talking about this shit anyway, but I appreciate that. Thank you. Bitcoin, where's it bottom? Who knows? I have no idea to any of these questions. But again, if you are looking to be a buyer of Bitcoin at some point, this is right. You wanted to see this. I mean, this is it. If you've been playing Bitcoin and you're shocked by this trading, I don't know what the hell you've been looking at. I don't even trade Bitcoin. This is the norm for Bitcoin every time. I've seen Bitcoin fall apart to the point was like, no way is this thing coming back. And a year later, it's ripping the new highs. Like, look at this. Okay. This move here, honest to God, I thought it was the death of Bitcoin. There's no shot this thing's coming back. I barely knew what the hell it was. But look at this. From whatever it was, 1,000 to 20, all the way back down to, what is that, 2,500? But look at it like, it had to do all this, But for like longer term stuff or investing purposes, again, I'm no Bitcoin fan, but this is, you want to see this. This is where you gotta offer these type of corrections or bear markets, whatever you want to call them. This is where you look for entries in this thing. You buy highs and you're gonna forget it. Get your ass handed to you. Yeah. But again, I don't, maybe again, I don't even trade Bitcoin, but I guess I'm so used to Bitcoin correcting like this that for some reason I know it's 50% off the highs. It doesn't even feel that spooky to some of the corrections in the past. Like even this one was nasty. Let's see, what was this? 68,000 down to 16,000 in a couple months. This is crazy shit, this Bitcoin. PayPal, I don't know. I don't even like, I don't know. It's too hard. This thing is destroyed. You hope for buyout, but you see what happens. You buy here thinking the worst is over, hoping for a buyout, and look at this. It sheds another 30, 40, 50 bucks off of it. These are hard. What we want to again, it depends what type of player you are, but like for the most part, you want to see things start to look constructive, and then flow starting to show up. This is just outright hockey stick pain. Path, I don't know if you were on SuperGal. I don't know if it was on the Thursday webinar. I think it was. I talked about Path a little bit. I don't like Path. Again, you're down to where there's a floor there, but what I don't like about it are the people touting it. You got every jabroni out there with a blog counting this name. Every day, pumping it. And at the same time they're pumping it, the CEO sells stock every week. Every week. So like this is the last thing you want to see. The last thing you want to see on a stock that looks like this, okay, is the CEO selling. You know what I mean? The CEO should be buying, no? If anything, and that probably doesn't help. So you got pump guys out there, blogs, whatever they call, pumping the stock on a daily basis, and the CEO is selling into the pop every time. So me personally, I would completely ignore that that name because of that. Other than that, I always wondered why this thing acts so poorly. It's not that bad of a company when you look at what we look at, but because of that, I would just ignore it. TTD, these names, it's interesting because a lot of people are interested in these names, and for good reason, because you got a crash there. It's going to be interesting to see, because I think these names, if we do go into some sort of pullback, what's likely to happen is these names start to bottom first because of the decimation here. But this is not just a pullback anymore in software. There's an issue in software, right? It's AI, whatever. It's above my pay grade. There'll be opportunities. There'll be stuff that survives this, but I think it's just time now. You know what I mean? You got to give it time. Trying to catch falling knives is difficult here. It's tough. Really tough. And this name has seen some flow at times. Software is crazy. Crazy. But supposedly AI is a big disruption in the group. But again, all these names, they had that parabolic move, like look at this TTD. These were These were the AI names of the COVID bull market, as you remember, Subagal. All the AI winners you see now, the TTDs of the world, they were the same stocks, different sector, but same thing. These were the leaders. So now this is just the other side of the coin and some real pain. Even the studs, like ServiceNow, I look at ServiceNow as a stud. You know what I mean? As a stud. This is a crash. Again, had a big, this is a big move. So this is not that abnormal, but that's a lot of pain. But again, look, like this has been a big winner. So these are the type of names I'd probably look first. But it's tough. I think it's more of a time. You rather not attempt trying to catch the bottom in these things. Even then it's tough. Again, there's no easy answer, but you want to see sellers get tired down here, right? And it finds some support. And then maybe some flow shows up, that sort of thing. But to try to get in the middle of this, because you got a lot of forced selling, hedge funds that's shorting, putting pressure on it. It's a tough one. It's a tough one. But again, we'll see. We'll see what opens up. We'll see what opens up. There'll be parts of tech that open up. No doubt. In other words, a cyclical driven rally, there are going to be parts of tech that are involved. So I just would look towards newer names, if that makes any sense. Newer names, cyclicals, but in tech, I'd look towards newer names. CLF, that fits the cyclical bill. Again, it's not the easiest trade in the world. They've had issues from time to time, but it makes sense as far as like the play on cyclicals, commodities. Serious laggard, but that may be the opportunity in it. I think if you buy it, it's a buy and you gotta sit on it, tuck away type name. You gotta have patience with this name, otherwise it'll frustrate the living daylights out of you. Yeah, so that's exactly what my thinking is as good as they look, even today, right? Certain parts of the cyclicals, they still look good. I think you got to be patient for pullbacks because of the risk of everything else weighing on them. And again, that might set up a great opportunity, right? That's the way I'm looking at it. May set up a great opportunity, but there's risk in cyclicals right now, for the reasons we went over. Financial conditions can tighten here. Economic data can come in less than expected. Again, people think about where we were in September, right? Everybody needing rate cuts, everybody holding on to every economic number that came out, wondering if this was going to be the job number that cracked. People were waiting for the economy to roll over and rate cuts to accelerate. And think about where we're at now. No rate cuts and GDP numbers knocking the cover off the ball. You got room for disappointment now. That's the problem, right? If these economic numbers come in on the lighter side or financial conditions start to tighten like they have, you got risk for cyclicals. Staples, and here's the thing, right? Staples have moved a lot, but you got two things going for you. They were the most shorted group on the street, right? most under-owned group on the street, and they're defensive. So if you do get a climate that I just explained, staples are going to be bid. So that's trickier here. It's just a tough group, right? It's a tough group. I mean, look, you've been bringing it up for 3 weeks. I thought maybe you took the bait and bought some. I was rooting it on for you. But, now at the chase, it's less appealing. Less appealing. Obviously, these names aren't the sexiest names out there, We've seen some flow in a few of them. Procter & Gamble has had some flow. What's another staple that quit flow? But, you get the Colgates, all that type of stuff. But they were heavily shorted. I just saw, can I pull it up? Hold on. Let me see if I can pull it up a second quickly. I posted it on Twitter. I probably could pull it up. Oh, man. I can't log in because they changed my login. Let me see here. Pepsi, Coke, right? They've all been those two names quit some flow. Where's that? It's got to be here. Hold on. Here it is, right? Well, here's one of them. So here's the staple setup coming into the year. Exposure, net short. That probably looks a little different now. That was early in January. But where's the other chart I wanted to show you guys? I know I posted it on Twitter, but I can't find it here. I had to post it in here. Hold on. Oh, God. Come on. I never find stuff when I want to find it. Anyway, it was showing how short they were. Oh, no, this is from Bova. We see more room to run for staples, which is still very underweight by funds and could benefit from recent policy announcements. So, yeah, I mean, dips, definitely worth looking if you're interested. Dips. Yeah, that's not it. Staples, the most hated sector on the street. Is this? No, that's not it either. These are prior posts. Yeah, no, this is just commentary talking about it. Yeah, again, they're just not sexy names. Another group that one name saw some real nice action. I played it yesterday, made a little money day trading it. These guys, chemical names. Big laggards. Usually their early cycle when the Fed starts cutting rates, that's why they've lagged. I guess they almost look like home builders. But they've been seeing flow. Dow, some really good looking action yesterday. I mean, for me to trade a Dow, there had to be good looking sweeper activity. Let me show you what it looked like here. Yeah, here's some of the orders here. I don't know if you guys could see it. Can I make this bigger? Yeah, there we go. So April 35s, 500,000. Here's some of the action. June 35s, 8,500 of them. 2027 leaps. June 37 and a halves. Some short-term stuff. Yeah, here's the June sweep. Here's another one here. 800 grand. 400 grand. You talk about decent sized orders too, right? So this is a laggard that again, hasn't really rallied and may hold up better. May even push higher. Who knows? Some of the others that have seen flow, HUN, HUN. Here's one of these guys. They report soon. CC. This has been a tough name, CC. But they're a chemical name. They got earnings coming up. Maybe you get a dip off earnings. Dow reported already. So this is part of that cyclical chemical names that we've seen Flow show up in. Okay, so these are, again, some areas of the market. But well, again, more opportunities will open up, especially we get a pop in net correlation up to here even. Oh, that would be beautiful, you know? It'll open up some nice opportunity. Nice opportunity. Maybe, you know, maybe even if we get it now, we get a pop in correlation up in this neighborhood, and then we get a nice some bullish momentum till selling may go away type of thing. Right? When are the midterms? Midterms are November midterms? Yeah, right? Their elections are November. But yeah, maybe we get a rally before selling may go away. If we get a little bit of a pull here, and you know, something similar to November, even that's nothing. Oh, you got the World Cup. I forgot about the World Cup. Yeah, maybe get a little more pop involved. Yeah, we'll see. Regardless, you know, if we get some pullback in cyclicals, whether it's a shorter pullback in the market or a little deeper, that's where we kind of want to keep focused. Again, there'll be trading opportunities in tech. I still think you got to keep the trader's cap on. You know, you want to keep the trader's cap on, and it's going to be tougher. It's going to be tougher. Yeah, which one? One of them's ripping, right? Was it Coke? Let me see. Yeah, oh my God. Like, look at these names, guys. Look at them. They look completely the opposite of tech, right? And again, the home builders, they're the biggest laggard. You know, you got, again, they're tied to rates and the Fed. But think of this, right? And I think this is probably the most bullish part of the home builders and kind of the thinking of the White House, whether you agree with them or not. Okay. You've had speculative mania all over the place, from Bitcoin to zero revenue stocks, space stocks, you name it. And they even said they want to do this. They want to shift now the stimulus, right? The money to go from that stuff to more Main Street economy stuff, right? Real economy stuff. Now Trump has had pets, right? You know, Intel has been a Trump pet. The rare earth plays have been a Trump pet. If you got involved in the early stages of either of those, you're a happy camper. The home builders might be the new Trump pet, right? The 2026 Trump pet. He's determined to get that real estate market cooking. Get rates down and get that real estate market cooking. You know? And if that happens, that group is going to look a lot different than it looks right now. And again, not even just home builders, Home Depots of the world, right? So that's why, as bad as they look, we want to keep an eye on there, you know, because it's a worthwhile opportunity if it comes to fruition. And, you know, we say the home builders look bad. Like, look, that looks bad. That looks like it's getting ready to break out to me. No? Now, it may stay in this to frustrate us a little longer than we would like. But ultimately, That's what it looks like to me. Yeah. And tech has nothing to do with this. I think even again, as long as tech is not crashing, that's what is the risk with some of these things, right? If tech is going through crash mode, you run the risk of these things selling off for selling. But tech could be dead money, and that will benefit groups like this, in my opinion, because money will come out of tech, and there's a shitload of money in tech and go into these guys. So that's where I think the opportunity is this year, guys. You know, again, we're fortunate, in my opinion. I think we've been lucky, even since October, that there has been even any opportunity on the long side anywhere in this market. The way shit got in October, blow off toppy. You know, usually that when you see action like that in a big chunk of the market, that screams major top. We were fortunate enough this go around to half the market not being involved in any of this over the last few years. GameStop, yeah, I haven't really been following. I know Barry got involved. Yeah, I don't know. I don't know. There's been some spec action flow in it. That's the extent of what I could tell you. You know, I'm not in it. I'm not looking to play it. I guess it's a bet on Michael Berry, but you guys know me. You know what I mean? Anytime all the eyeballs are on something, I go look elsewhere. I don't like to be with the crowd. You know, here's the logic behind it for me. Okay. If Michael Berry was really bullish on GameStop, he wouldn't be letting us know about it until he's done buying it. You know? He don't want to advertise it. Now, if he wants to get a squeeze going in it, then he's looking to pump it. But I don't want to be a part of that, you know? That's like this shit. These poor souls. Every trader, every retail trader on Twitter bought this thing. ASSS. This piece of garbage. Now, either every mope on Twitter gets filthy rich, or the norm is they all get their ass handed to them and hopefully learn a lesson. Yeah, but he's also been saying short the market for the past 5 years. You know what I mean? Now you could take a dart at any of these things and been short and make money. He was short Nvidia a year ago, 2 years ago, when he was still running a book. I think you know, he got short. He had to cover it right away. Again, nothing against him. You know, he's a fund manager, big trader, probably 10 times better of a trader than I am. But yeah, this game's not easy. And shorting, good luck. I can tell you that from experience. There's nobody consistent on the short side. You don't believe me? Go ask Drunken Miller. Nobody. But guys, you know, I don't want to badmouth anybody. Listen, when it comes to tout plays where pumps, these guys aren't looking, they're not helping you. They don't give a rat's ass about you. Okay? They want you to buy to push their bag higher to sell. Otherwise, they wouldn't be telling you. Pretty simple logic. Okay, pretty simple logic. The only reason to go out of your way to tell everybody what you own and gas it up is to pump it. No other reason. You know? So if you take any advice from this webinar, please let it be that. That's the only guarantee I could give you that I'll save you money. Yeah. There's your racial blur for the day. I'm talking about the gurus on social media, you nut job. God. Anti-Semitics. Any other questions before we wrap it up, guys? Looks like futures just open here down 30. Child, I'm sure you feel bad about it too. What I was gonna say. So that's it. Yeah, and obviously, the small caps. I own, and if we do get a pullback, even maybe a little bit more than we got here, I'll play TNA and then try to make some money and move some money into IWM calls. That's kind of my goal there, But I want to find other stuff. I want to find other stuff. I want to find other things. All right. So everybody, as always, I appreciate you coming after the close, spending some time talking some shop. All right, let's see how this all shakes out. But again, I don't think even if we do get some selling, I think it's the end result's going to be a good thing because a lot of us want to pull back in the stuff we're interested in. All right. So, have a good Friday. Good luck for tomorrow trading. And Steam Room members, I will see you bright and early mañana. Have a good night, everybody. Take it easy.